Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, make sure you subscribe to my channel and stick to the end of the video to see my all-time returns. So currently you see that today I'm up 0.95% at $815,000. Past year, up 56%. So very high growth this past year. And there's a lot of optimism. Cash position of $90 at a yield of 4.75%. I do have another $110,000 in a high yield savings account at a yield of 4.25% that I'm gradually deploying into the market as I see there's opportunities to buy. So taking a look at my portfolio, you can see my largest stock position is NVIDIA, which makes GPUs and data centers. And there's been a lot of hype around artificial intelligence. And you can see this surge 208%. This makes up 26% of my portfolio, or $217,000, up 2,628% total return, an average cost of $5.21 per year. Next is Spider S&P 500 ETF, which tracks 500 largest U.S. companies, makes up 13.84% portfolio, or $112,000, up almost 5% on this position. And it's a good way to diversify your portfolio with an ETF like this. And it has pretty high liquidity, so it's easy to exit the position. Next is Apple, which manufactures iPhone, iPad, Mac computers. They also have wearable devices, and as they continue to grow their business, their services also grows as well, such as iCloud, Apple Music, Apple TV, any services tied to their devices. This makes up 6.6% portfolio, or $53,000, up 496% on this position. Next is Amazon, which is an e-commerce company, and they also have cloud computing, Amazon Web Services. Makes up 5.61% portfolio, or $45,700, up 109% on this position. I think Amazon will continue to benefit from the AI wave as companies move their data into the cloud. Vanguard S&P 500 ETF, very similar to SPY. This makes up 5.29% portfolio of $43,000, up 21% on this position. Meta Platforms. So this is a very high growth company. Majority revenue is online advertising, and the products include Facebook, Instagram, WhatsApp, virtual reality company Oculus Rift, and also Threads, just copy of Twitter. This makes up 4.74% portfolio, or $38,000, up 231% on this position. Vanguard Growth ETF. This one is also similar to S&P 500 ETF, but focused more on the growth stocks. This makes up 4.62% portfolio, or $37,000, up 39% on this position. Next is Microsoft, which provides enterprise services like cloud computing, and they also have a stake in OpenAI, and they also have hardware like laptops and gaming business like Xbox, but they focus on a lot of productivity with their enterprise services. It's paying out dividends soon on December 12th. This makes a 4.36% portfolio, or $35,000, up 315% on this position. Next is Vanguard Information Technology ETF, so it focuses primarily in the tech sector. This is 3.7% portfolio, or $30,000, up 343% on this position. Next is Taiwan Semiconductor Manufacturing Company. They make a lot of chips. This makes up 2.98% portfolio, or $24,000, up 140% on this position. Mercado Libre, which is in the Latin American market, They have e-commerce platform as well as electronic digital payments. This makes up 2.66% portfolio or $21,000, up 87% on this position. Visa, which is a payment processing company, makes up 2.55% portfolio or $20,000, up 157% on this position. Alphabet Class A shares, which has voting rights. This makes up 2% portfolio or $16,000, up 205% on this position. I also have Class C shares, which I'll get to in a moment. Costco, which is a warehouse retailer, majority of the revenue is from membership. This makes up 1.84% portfolio or $15,000. This makes up 206. This is total return of 267%. Alphabet Class C shares does not have voting rights. This makes up 1.66% portfolio or $13,500, up 182% on this position. CrowdStrike, which is a cybersecurity company, you can see it dipped in July, and now it's surged back close to almost the highs. This makes up 1.47% portfolio or $12,000, up 153% on this position. Next is United Health. This is a healthcare company. This makes up 1.42% portfolio or $11,500, up 252% on this position. Home Depot, which is in the home improvement space. This makes up 1.21% portfolio or $9,800, up 132% on this position. Berkshire Hathaway, it's Warren Buffett's company. They are a holding company, so they own a lot of diversified companies, either wholly owned or partially owned. This makes up 1.09% portfolio or $8,000, up 147% on this position. McDonald's, which is a fast food chain. This makes up 1.08% portfolio or $8,800, up 82% on this position. Palo Alto Networks, this is a cybersecurity company. This makes up 0.95% portfolio or $7,700, up 67% on this position. Fortinet, another cybersecurity company. This makes up 0.86% portfolio or $7,000, up 41% on this position. Alibaba, which is a Chinese e-commerce company. They also have cloud services similar to Amazon. This makes up 0.75% portfolio or $6,100. I'm down 50% on this position. So a lot of these Chinese stocks are very volatile, but I don't plan to sell it. We'll continue to hold it long term. PayPal, which is a digital payments company, makes a 0.64% portfolio or $5,000, up 20 or down 22%. You can see this past year they've been improving in terms of their stock performance. Still hasn't recovered from the peak, but you can see it's gradually recovering. Block, which is parent company of Square, another digital payment company. You see, same thing, same story. Hasn't gone back to its peak yet, but slowly recovering. This makes up 0.59% portfolio or $4,800, down 40% on this position. Some of these companies that I've been down on, I'm going to hold for a bit. I might sell them just to offset some of my gains in terms of tax. AT&T, so this past year, very strong growth, and they've had positive earnings report in terms of reporting future profitability. This makes up 0.5% portfolio or $4,300. I'm down 10% on this position. I'm going to continue holding AT&T. But once I net zero or have some positive gains, I might liquidate AT&T. Twilio, also very high growth. Hasn't gotten back to its peak yet, but this past year it's been growing. This makes up 0.17% portfolio or $1,300, down 53% on this position. I might liquidate Twilio just to offset some of my gains. Baozun, which is a Shopify China. This makes a 0.04% portfolio or $309. I'm down 92% on this position. Again, I might sell the stock just to liquidate and offset my gains, just because I sold some stocks at for capitalized gains. And in terms of my overall portfolio orders, you can see a lot of it is in the S&P 500 ETF. Pretty much the past month or two been in the Diversified ETF. And I sold my Johnson position just because I think I could get more exposure diversified in the ETF. And Shopify I sold as well. This one I sold it before its earnings report, so it could have hit 112 or 115, but I just want to exit that position just because I think my portfolio is very concentrated in specific set of stocks and I want to get more diversified exposure. And in terms of my all-time return, which I promised that I'll share, currently up 190%, which equates to $534,000. So I've been holding my positions long-term and continue to add to it just because I think long-term the stock market will continue to have potential upside, and I'll gradually deploy my $100,000 into the market when I see there's opportunity to buy. See you in the next video.